Welcome to our webinar for the 9th of June 2021. Please excuse us for some minor technical issues that we had. So I'm Angelo Zittis. I'll be hosting this event. And for those who are with us for the first time, this is our fourth webinar on trending subjects, and we aim to keep up these presentations in the following weeks. Keep that in mind. Follow us if you can. We're presenting a lot of valuable information from a trader's perspective. Now, today we'll be talking about the big four US tech firms, and we will be providing information on the fundamentals and the price action of the companies involved. Now, the reason we have prepared this webinar is that stocks are an extremely interesting part of the financial markets, and they tend to attract a lot of traders, and especially stocks like the ones we are about to discuss. Now, we always like to remind ourselves of the reason that we're here. That's because we are traders and we love the challenge and the art of trading, and we thrive to improve and grow as traders. So, as I'm going through the webinar, we would encourage our participants to be proactive and write comments or questions in the chat for us, and we will be willing to check and come back and talk about whatever you guys have in mind as long as it's relevant. So if you're ready, then let's do this. So the companies we will be talking about today are, as we said, the big four US tech. They are Google, Facebook, Amazon, and Apple. Now, the big four tech companies are somewhat always in the market's focus, with the market participants carefully following the progress or concerns surrounding the companies on a daily basis. The companies are of tremendous importance to the world, not only because of the services that they provide, but also because they employ a considerable workforce, which supports the economy as a whole. From a trader's perspective, this is awesome, as the fact that these stocks are constantly monitored seems to enable for setups to place orders, thus increasing the possibilities for a significant gain. Yet, despite that, the big US tech companies are very important because with their volatility, they have the strength to move or dominate the price action of some of the largest US indexes, playing a crucial role on the overall activity of the stock markets. So if you're ready, we're going to make a start with the first company, which is Google. Sky limit if privacy protection fears are overcome. That's our title. So Alphabet Inc. is the mother company of Google, and the firm's Google segment is divided into Google Services and Google Cloud. According to the most recent Alphabet first quarter 2021 results, revenues saw an increase of 34% on a yearly basis. The increase in revenue is more than double compared to the increase observed in the previous year's same quarter. So that's a quarter-on-quarter comparison, 2021 to 2020. Alphabet's profits seemingly increased as the pandemic kept people at home watching YouTube videos and clicking on web advertisements served up by the company. Another fact that is usually considered a positive sign for a company's economic health was the announcement of a $50 billion share buyback program. So they're buying back their own shares. Upon announcement, the news pushed shares higher in after-hours trading. Some analysts suggest Alphabet's cloud business, as well as Waymo LLC, if I'm pronouncing it correct, the firm's subsidiary related to autonomous driving technology development, could be the strongest segments of its overall business and could even support long-term growth for Google. One of the major concerns over Alphabet's activities, and specifically Google's search engine, is privacy and safety of users, which spills in many other directions, including third-party data collection. These are some of the major concerns for Google. Now, in the past days, CNBC announced the US Department of Justice is beginning to prepare an antitrust investigation against the company. Now, despite the company being constantly bombarded with negative headlines over the pre-mentioned matter, on a year-to-date basis, the company's shares are up plus 36.85%. So let's move on to the price performance card from Refinitiv Aecon. So this is a Refinitiv Aecon price performance card. Now, as you can see, Google has a very volatile share price with its 52-week range surpassing $1,000. So we're talking about its lowest for the past 52 weeks being at $1,352 and the highest being at $2,431, with the most previous days being very close to its highest price in the past 52 weeks. Yesterday, the session closed at $2,398.44. And as I said before, year to date, the stock is up 36.85%. So that's pretty good. Pretty volatile stock with a big range, big movements. And then we move to Google's technical analysis. So from a more long-term view, Google's share price is in an upward trend, which has even intensified from the beginning of the current year. So in 2021, Google's chart has been going a lot more higher. Now, the price action peaked in the last days of April, reaching our current R3 2428.10 resistance. Yet in May, Amazon share corrected to lower ground. By the end of the month, managed to reach our currently noted S3 2340.15 support. From there, the price action gradually moved upwards, testing the S2 2361.25 line and even higher to the S1 2380, which were all previously resistances and now turn to support levels. In the latest sessions, a test of the R1 2401.85 level was observed, but the price action did not manage to stay above it, making it a challenge for the bull. So that's a considerable level. Yesterday, the upward momentum was extended and the star R2 2415.25 very briefly and corrected lower. Okay, yet the RSI indicator did not surpass the 70 level, falling and stabilizing above 50, limiting the buying momentum in our view. So our current direction that we suggest is upwards. So let's move to Facebook. Facebook is our second choice. Now, still growing despite adversity is the title. Facebook is a social giant that currently runs platforms with over 2.3 billion daily users. Facebook also owns other social media platforms like Instagram and communication apps like WhatsApp. So, according to its financial results for the quarter ended March 31st, 2021, the company saw a drastic boost of total revenues of 48% compared to the same quarter last year. Furthermore, its net income figure was up by 94% on a yearly basis, once again displaying impressive results and confirming the company is in good shape financially. Facebook, very similar to Google, we're saying this, we're going to come back to this, benefited greatly from advertising during the pandemic, which according to its earning results added 46% on a yearly basis. From a more critical perspective, the company has also crossed swords with many governments that have challenged the social media firms' practices on various fronts. Most recently, the Financial Times said the UK and the EU formally announced competition investigations into Facebook's dating and classified businesses. Now, in the past, Facebook had also clashed with the Australian government. That's a big story in our view, which passed a law aimed at forcing Google and Facebook to pay taxes for news content on their platforms. The situation turned into a disaster, with Facebook blocking all news content to Australians, which created a minor pandemonium, forcing the government to come back and renegotiate the laws, yet leaving a resentment on both sides over the issue. Now, this has come back to play in the previous days, and something has, this story has come back. That's all you have to know. Now, despite the fact that Facebook has come under immense pressure from authorities in the past years, the company displays constant growth in terms of valuation, stock price, and users, proving it is rightly among the most influential and powerful companies of the world. In our opinion, Facebook is impressively at the top, as the company is constantly dealing with hate speech issues, extreme political views being posted on its platform. People have also posted criminal activities on its platform. All right. So Facebook can be used in a positive way to connect people, okay? But in our view, they must find a way to control the content posted. So let's move to the Refinitiv Acorn price performance card. Now, as you can see, the 52-week range lowest price is 207.11 cents, and the highest price, which was also approached in the past sessions, is at $337.69. All right. On a year-to-date basis, Facebook share price is up 22.16%. And we move now to our technical analysis for Facebook. Now, Facebook has also been in an upward run in May and June, and in the past 2 consecutive daily sessions, it has even reached to new all-time high levels, which is currently marked as RR1, 336.95 resistance. Now, the lowest reached in June so far was a drop to our S3, 323.90 support, which is also a considerable line for traders to note. The price action quickly rebounded to higher levels like the S2, 328.35 line, and then even higher to the S1, 331.60 support. Now, these were previously resistances and now they're turned to support. At the moment, the price action is between our S1 331.60 support and our R1 336.95 resistance. And we could use these levels as make or break lines. Okay, so they can determine the further price direction. The other 2 lines are the R2 340 and the R3 343 have not been reached yet, but could become a target if the momentum upward is to continue. On the 7th of June, the RSI indicator below our chart moved across the 70 level, implying the buying orders had increased considerably. But on the 8th, the indicator moved just above 50, possibly displaying some stabilization. The current direction we have in mind, that's our personal view, is upwards. We move now to Amazon. Now, Amazon diverse expansion results remain to be seen. Amazon, the biggest online retailer worldwide, has websites dedicated to different parts of the world, supporting many businesses on the resale front. According to its financial results for its first quarter ended March 31st, 2021, net sales increased 44% in the first quarter compared to the first quarter 2020. Despite online selling, Amazon's business like cloud computing and advertising inspire confidence and have driven results accordingly. The company has shown its ability to allocate resources on various unrelated fronts and be very competitive doing it at the same time. For example, Amazon's Prime Video streaming operates within a very competitive industry in which abundant consumer choices exist and companies face high production costs and the need to be competitive on subscriptions. Amazon here is competing with other big names, Netflix, Disney, all right? And to be honest, Amazon has not been able to head the list so far, so it has more work to do. But there was a headline in the past days that we consider very important. So Amazon's action to increase its chances to gain more market share, announcing it bought film studio MGM in the past weeks, was rightfully chosen. Now, the move, however, needs to be justified in terms of users, so it remains to be seen whether it will support Amazon Prime. Amazon also purchased supermarket chain Whole Foods, stepping into unknown territory, thus possibly upsetting big competitors like Walmart. So they're also competing on Walmart on a completely different point of view, different market, different industry. Amazon is also operating as an online pharmacy now, and people can purchase medicines online. All right. So in the near past, another headline that in our view is important is that Jeff Bezos, the company's founder and CEO, announced he will formally step down as Amazon CEO on July 5th. His successor will be Andy Jassy, that's Amazon's cloud computing boss. All right, so the new CEO will probably come under criticism. It's normal to come under criticism because Amazon is a huge company and it provides a lot of goods to the world, a lot of services to the world. So being the CEO comes with a lot of responsibility. All right. So this has also happened with Microsoft. Microsoft is another example with Satya Nadella and Bill Gates. Okay. Satya Nadella is the CEO of Microsoft. But in that case, they managed to do that, and it seems to be working out. So let's move to Amazon's price performance card. So as you can see here, on a 52-week range, the lowest price is at 2,490K approximately, and the highest price was at 3,554. So this is a very large price range. On a year-to-date basis, this is break even. Amazon is break even 0.22%. And the latest close was at 3,264.11. Moving now to the technical analysis for Amazon. For most of the past year, Amazon's share price has been moving in a large sideways movement. Thus, we have the current direction as sideways. Now, we have chosen to narrow this price action to smaller ranges, as we would like to remain relevant to recent price activity. Since May, the price action has been mostly moving between our R1 3,294.60 resistance and our S3 3,183.75 support, with the levels in between the S2 3,219.05 and the S1 3,255.15 also tested at various times. Now, if a bullish momentum materializes, then the stock could break above the R1 and head to the R2 3,325.05 level. Our highest level at the moment is the R3 3,356, which was tested briefly in early May. The recent upward move for Amazon share is highlighted by the RSI indicator below our chart surpassing 50. And as we said, the current direction is sideways. So we move now to our last stock, which is Apple. Can competition keep up? So Apple is the oldest company among the Big Four group, but this only indicates it managed to remain relevant to the trends and preferences of their users, especially in the past 20 years. So that's impressive. That means that they could innovate. They know how to create trends. So based on its most recent earnings report for the period ending March 27th, 2021, Apple posted a quarterly record revenue increase of 54% year on year. The success that Apple has managed to obtain through its iPhone is remarkable, and also the fact that it managed to pass the quality to most of its other products is a sort of revolution. Apple has a great market of followers all over the world, with international sales contributing for 67% of the quarter's revenue. But most importantly, it has a good business in China. Now, China is not only a large customer market, large customer basis for Apple, but also it's currently the biggest supplier than any other country, taking full advantage of the mainland. So Amazon has a huge followers group in China, and it's also buying a lot of things. It's also using materials from there to produce its products. Now, its dependence on China is a sort of concern for the US government, which is trying to reduce exposure to the mainland. So this becomes a political problem. Yeah, the US government is trying to compete now with China. They're doing things to compete with China. And companies like Apple, companies like Tesla, which have relations, strong relations with China, are sort of creating barriers to what the US is trying to do to elevate itself and compete with China. In the past weeks, Apple has been in the media's eye once again as Epic Games, the maker of Fortnite game, commenced its case against Apple. They're taking them to court, accusing the big tech company of operating an illegal monopoly. Now, this is not the first time Apple has come against such accusations, and in our opinion, it may continue to face such adversities as long as it continues to create quality products. So we move now to the price performance card from Refinitiv. So as you can see, the 52-week range is at 81.83, the lowest price. The highest price is at $145.09. This is post their stock split that took place months back. And on a year-to-date basis, they are a little bit down, minus 4.48%. The latest close was at 126.74. Okay. And being more specific, we move to our technical analysis for Apple. Now, Apple's chart is characterized by a sideways movement within the R1 127.70 resistance and the S3 122.10 support that stretches back to May the 10th when it commenced. Okay. If the R1 is breached and the trend holds above, then the R2 129.20 could possibly be the next target for the bulls. As the highest level for this chart, we have noted the R3 130.25 line, which could be reached in a strong buying scenario. Yet, at the moment, the undisputed level, in our opinion, is the R1 127.70, as it has been tested various times recently, but has not been breached in the past weeks until now. The RSI indicator seems to mirror the stock sideways motion, as it has not broken outside the 70 and 30 ranges for almost over a month. We're not done with charts. We want to see another chart here, which is all the big 4 US stock companies together. This is a chart that indicates their activity on a daily basis for the past 6 months. Okay, so as you can see, Alphabet and Facebook are noted with purple and light blue, and Apple and Amazon are yellow and green accordingly. So we can see Alphabet, Google, and Facebook moving upwards, and their trend is somewhat similar. It's not exactly the same, but it's similar. So they've gained a lot from advertisements, which makes it interesting, and that's why we've put them both on an upward momentum. That's our opinion. Now, Alphabet, Google, and Facebook have similarities. Now, what are the similarities? They're dealing with similar issues on personal data protection and security. And they're also gaining a lot from advertisement. And they've made good money on advertisement. That's why we're seeing this movement. So we believe that the price action is similar because they're dealing with similar situations. And also, Amazon and Apple are not on a similar basis, but there's a lot of volatility here, and we can see that they can make a lot of big daily movements. All right. Now, these are volatile stocks, as I said, and have the momentum to make big daily moves. So from a trader's perspective, these stocks require special attention when placing orders. We are saying this because some traders may not be ready to deal with this sort of volatility, and it's okay not to be ready. Yeah, everybody has, as a trader, everyone has his own path. All right, so caution is advised here, and trading discipline is required. So the question here is, how disciplined are you to trade these sort of stocks? All right. If you don't have the trading skills required for this, then it's best to take extra caution. Another question here is, how developed are you as a trader to deal with this sort of movement? Let's not forget, these stocks have the strength to move the biggest indexes in the world, in the US. Okay, so don't just follow us blindly and get excited. Now, make your own research, make your own technical analysis, make your own fundamental analysis, and then compare to ours, to other analysts, and then form your own opinion. Now, if you're still not sure, you can trade on your demo account to try to test them out, get a market feeling, and from there on, if you feel confident, you can use real money. All right. So these stocks are to be traded with caution. I repeat. As a general comment, as a closure, and perhaps speaking on behalf of all the pre-mentioned companies, we could say that they have expanded and reached the level of almost impossible influence, which could have also turned them against each other. These companies are not only competing with their industry, which is currently ever growing, but most importantly, they are fighting to keep and increase their market share on as many fronts as possible, turning on each other. All right. This could add more drama to the big tech sector. Also, as governments, market participants, competition regulators are viewing the dominance of these companies, they have shown signs of frustration and agony over the growing power that these companies preserve. All right. Some argue that attempts to break down the big tech sector into more controllable pieces is inevitable. We've seen headlines come up, and some people are just in favor of doing this. And in our humble opinion, these companies have rightfully gained the #1 spot in growth and sales in the past decades, as they have evidently worked towards improving their products and offering the world with cutting-edge technology. Okay, but offering these services goes with a lot of responsibility. All right, that's why everybody is constantly on them. All right, and pressing them in different ways. Another company that we haven't mentioned is Microsoft. We're leaving Microsoft for another webinar, another discussion, and that's probably coming up in the near future. But they have also been criticized for monopoly in the past, and they are also among the biggest companies, influential companies, and they deserve a similar analysis. Okay, so yep. Now, before we close, please visit our website and check out the upcoming Iron World Championship, which is first round starts on the 14th of June. All right, we have a prize pool reaching up to $1 million. This is a serious championship, and please make sure to follow up. This is an interesting thing for all you traders out there. And as a closure, I want to say some thank yous. All right, special thank you to the webinar group and marketing for putting this together. Thank you to the research group, and many thanks to our participants today. We appreciate your time, and we aim to provide more valuable trading information in the near future. If you would like to contact us for any reason, a question, trading idea, concepts that interest you, please do so with an email to research_team@ironfx.com. That's research_team@ironfx.com. And from everyone here at IronFX, wishes for health, happiness, and until the very next time, wishes for solid trading.